Okay, we should be good. We shouldn't have audio problems this time, to my knowledge. So if you guys can see me and hear me clearly, and we're locked and we're loaded and we're live, do me a favor and drop some ones in the chat for me. That way we can go ahead and get tonight started. If you guys can see me and hear me, do me a favor and just drop something in the chat, and we will go and get started with tonight's program. Sweet. Shout out to Cam for killing it the last couple weeks. In futures now, that's the word for that's what the word is, bro. I still gotta call you about the 24K account, but shout out to everyone that is on here tonight. I appreciate everyone for not, getting mad at me for not doing a live stream last week, and for doing this on Friday night instead of yesterday night. But I'm human too, and I had a lot of stuff going on. I've been having some things going on in life, you know what I mean? I have a family, and some stuff happens, occasionally, and, it takes people's attention, right? So I appreciate everybody for being patient with me. And tonight we're going to go ahead, dive into the markets, answer questions, go over a crazy week that has happened on the charts, and then we'll go ahead and answer questions off the charts, and make sure that you guys not only understand why we were able to have such an amazing week this week with trading, but what we can expect next week, and more importantly, that way you can have an amazing week trading. The whole reason I'm doing these calls, especially on YouTube, for free and not charging money for them right now, is that way you guys can learn how to trade, right? And you guys can learn how to not learn how to trade, because anybody can learn how to trade, right? But more importantly, learn how to trade profitably, because learning how to trade profitably is a completely different thing than just learning how to trade, right? And anyone that's been trading for longer than, a few months, even a year or so, you guys know, there's a difference between just, getting on a chart and trading, and actually knowing what you're doing to enter and exit the market profitably on a consistent basis, right? So that is my goal, to help you guys with that, right? So throughout this call, we're going to be doing a couple things. We're going to be going over, again, my pair, my strategy, and my trades that we've taken and that I've sent out publicly throughout the last, week or two. And your job on this call is to, again, take notes or follow along on your chart, or just get an understanding of what we're doing. That way you can apply it yourself. And if you are more of a new trader, and you're somebody that, you just joined Cashflow, or, you're thinking about joining Cashflow, or you're just here, that way you can, learn, whichever one, it's completely fine, right? But point of what I'm saying is, for you guys, make sure that you take notes and ask questions, right? Because I'm going to be going over beginner stuff, intermediate stuff, and advanced stuff throughout the call, and I only have so much time, right, to get into that. So, do your job and ask questions if I say something that's confusing you, right? And I'll go over, and I'll explain that. But with that, we'll go ahead and we'll get into it. Let me go and do this. Okay, so we have had a crazy week. Where do we even start? Where do we even start with the explanations, right? Because there's been a lot of stuff, and I think I've been doing a good job at keeping track and updating you guys about what's been going on in the economy, and, in Trump economy, you know what I mean? For, to say it like that, so there's been a lot of stuff that's been happening that's been causing the market to go crazy, and, pretty much take away all of the gains that the dollar and that the markets in the U.S. have had in quarter 4 of 2024, right? In the end of 2024, moving into 2025, U.S. dollar DXY was surging, and it was gaining a lot of strength, gaining a lot of momentum, and it's been more or less a very volatile last 6 months. You know what I mean? I know obviously that sounds very generic. It's been, that's the whole year basically, right? But, this week specifically has been very volatile, yes. But the pair, because I've only been trading Euro USD and I look at other pairs, don't get me wrong, right? But I actively trade and I base my analysis off of the dollar and off of Euro USD, and I've been doing that now for like 2.5 years, pretty much, just looking at this pair every day, right? So I've been seeing it enough to understand, okay, well, it's been moving a little bit weird compared to usual. You know what I'm saying? So this time last year, it wasn't moving like this, and we'll go ahead and we'll pull it up. Right, in the last 6 months in general, the market has been moving hundreds, if not thousands of pips, you know, in one direction or another. And typically it's more of a, you know, there's more equilibrium involved in this pair specifically. So quarter four, and into quarter one as well, to be honest, the dollar, again, was gaining a lot of strength, gained a lot of momentum, and the pair Euro USD dropped significantly. Okay, and we went over all that live as well if you go back and you look at the other live streams. But, point of what I'm saying, and that took around, again, 6 months, more or less. You know, 5-6 months. And in the last 1 to 2 weeks, all of those gains have been wiped out as Euro USD skyrocketed and the dollar lost a lot of the strength that it built up over the last 6 months. So, there's a few reasons as to why this is happening, right? And we've talked about this again before, but we're going to go ahead and we're going to mention it again, right? Because, you know, it's going to be an ongoing issue for the next 3 to 6 months, okay? So this, me talking about how the markets have been a little volatile or how there's a little bit of irregularity, I think that's how you'd say it, irregularity, whatever. But all of those things, it's going to continue to happen, and it's not going anywhere, right? It's not, because of a few different reasons, right? So number one, obviously for those of you guys that are not into the political affairs of the country, you know, it's cool, I get you, right? But something that's been happening predominantly, you know, the last 2 weeks, 3 weeks, is Trump and the U.S. have been involved in a trade war, right? A trade war where they are implementing tariffs, and I still need to make, I have the video made, I just need to post it. Maybe I'll post it this week, actually. A video about what tariffs are and how they work and how they affect, you know, currency pairs. But we're going to go into that today pretty much in a more in-depth manner. But so to explain it, you know, fast, you know, Trump has been implementing tariffs on different countries that we supply a lot of goods from, or that we get a lot of the goods supplied to us from. And these tariffs, you know, are, you know, like monumental things. You know, they've never been, he put like 125% tariff on China, you know, or like 100% tariff on China. And, you know, obviously, to my knowledge of my, you know, 26 years of life, a majority of our goods and services are sourced from China, you know, so when this happens, and then he put like a 25 or 30% tariff on India, I think another tariff on like Brazil or whatever other major countries that we have a lot of trade with, these tariffs are going to cause a lot of further tension and a lot of further unrest, not just in an investor standpoint, but on a retail consumer standpoint for you and me, right? Obviously, we're entrepreneurs, but at the end of the day, you know, we're normal people, right? So what's going to happen with that? So the reason why the dollar has been losing value as of now is because when people are hearing these tariffs and people are hearing political unrest and people are hearing, you know, trade wars, it causes people, again, to be fearful, right? And when people are fearful, they start selling stuff. So Trump kind of did a little bit of a form of advanced market manipulation in the sense where he told everyone ahead of time, right? And I could pull up the articles maybe if we get time, but he told everyone ahead of time that he was going to do these tariffs, and that he told everyone when these tariffs happen that basically all the markets were going to go down significantly. Stock markets, crypto markets, real estate market, every market dropped significantly when this happened. The stock market lost like $5 trillion in overnight or something like that. But he told everyone about that, and I'm pretty sure on Twitter, or X or whatever, he tweeted to go buy, because he pretty much manipulated the market to go down. And let's go look at the dollar, right? That way we can get a better idea of everything, right, while I'm blabbering. But I'm pretty sure he told everyone to go buy at a certain point, because he knew that what was going to happen as a result. What he did directly after that is he paused the tariffs that he announced. So he announced the tariffs that he was doing, crashed the market down, and then announced that they were pausing the tariffs for 90 days, more or less. And as the announcement of the 90-day pause came out, every single other market that had just went down began to recuperate. in essence, you know what I mean? That's what basically happened in the stock market specifically. But in Forex, it's a little bit different. And we'll get into Forex specifically. But the reason why I'm talking about this is because now what I just said, the next 90 days, right? So even though Trump did announce the tariffs and he did announce what was going to happen, he hasn't fully implemented them yet to my current understanding and my current knowledge of me trying, to get an understanding of all of it, right? And again, how it affects us as traders, okay? So, yeah, again, to my understanding, the tariffs have been paused for 90 days, right? So we have the next 90 days of market instability and market uncertainty is what I'm getting at, right? I obviously don't know what's going to happen with the market, and I obviously don't know what Trump is going to do or what, every other major country is going to do. For all I know, we might be in a war in the next 3 months, for all I know, right? So I'm saying this to let you guys know that the market is going to continue to be rocky the next 3 months. And what I've seen, and, we'll go over technical analysis, obviously, in a couple of seconds or a couple minutes, because that's still how we were able to get amazing and beautiful entries this entire week. But the fundamental data right now and the political data, more important, not even the fundamental, the political data right now is completely overriding technical analysis in every way, shape, and form. So the technical analysis that we're doing and that we're gonna do on this call, it really doesn't have anything to do with anything, but we're gonna try and tie in a technical analysis, I guess, or an analysis in general, that ties in with what we can expect to happen with the dollar based off of the political tension that's going on, right? So political tension, number one, right, is why there's been a lot of moves in the market this past week, right? And number two is there's been a lot of bad news for the dollar, right? So if we go pull up, Forex Factor, and we just go pull up recent, major impact reports, right? NFP wasn't good. CPI wasn't good. That just happened. I think that was CPI that just happened, or PPI, one of those, or PCE, one of these just happened. PPI, core PPI just happened today. So that one was terrible. So let me make myself a little smaller here. And let's go back and we'll look. Well, today's Friday, so here's Friday, right? So we're just going to do this real fast, okay? That way you guys can see with me. Okay. USD, 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 USD. Red, red, red. Bad, bad, bad. Okay, so all those three are bad. That's bad for the dollar. That will go into today's market, and we'll show you guys how that affected everything. Yesterday, PMI, another PMI, bad. Those don't matter. Unemployment claims was okay. But in this sort of scenario, when there's so much, how do I say without sounding confusing? So yes, unemployment claims matter, and it does affect the market in a positive way. And we'll go pull it up on a chart because there was positive movement on Euro US. A couple of the trades I took this week were sell orders, where I was buying the dollar essentially because the dollar had some good news in these short instances, right? But that one positive news report of unemployment claims will never and does never, and it never will, overshadow everything else that we just mentioned. And also it won't overshadow the fact that previous news was also bad. So if we continue to go further, right, if we look here, oh, that's CHF. Wednesday, that's when Trump announced the tariffs, so that doesn't matter. But yeah, so that's perfectly good example, actually. So Trump announcing these tariffs here the day before, Wednesday at 4 p.m., just because now that there is a, where is it? Where the heck did this go? Oh, I'm way farther away. I was like, where is I? I was like, yeah, the 4th. What are you talking about? Okay, so let me go back. I don't know why I jumped back that far. But, okay, let me go back to more recent. Okay, so there's this Wednesday. Here we go. Okay, so USD, FOMC, they didn't change interest rates yet. They probably will cut interest rates, though. Probably at the next Fed meeting, they probably will cut interest rates because of all the stuff that's been going on to combat inflation is what their attempt is going to be doing. So it's all going to, everything that's happening right now, again, it hasn't happened before, really. So, you're, I'm doing my best attempt to, help you guys navigate this time as well, right? And I'm talking about this so much before we even get into the chart specifically, because a lot of you guys skipped the I think it's like what chapter is it? It's like chapter 8 or 9 in the course itself, where I go over all the fundamental news releases and how they affect the dollar, and how, just how the DXY in general, how the dollar moves and how the dollar functions and operates, because that's what really we're trading. We're not really, yes, we're trading Euro USD, but we're trading the dollar against the Euro. You know what I'm saying? And so you have to be aware of this kind of stuff. And you guys don't necessarily have to do it too much, because I'm mostly sending out my trades every day. But you don't need to be like glued to the headlines and, reading every single thing. You just gotta you gotta be aware of the bias. That's what I'm trying to get at. You just gotta be aware of the overall bias, right? Because if the bias is, okay, everyone's fucking freaking out, even so, everyone's freaking out, we're gonna sell everything. That's the bias, overall bias. That's the 80% of people, and 20% of people are telling you, oh no, don't freak out, whatever. What's the market gonna do? Everyone's selling their shit, it's gonna go down. You know what I'm saying? Same exact concept, where if the overall bias is, okay, well, the dollar, we're freaking out, we don't know what's gonna happen in the US. Let's go take our money, put it elsewhere. Okay? A good unemployment report, wasn't it unemployment it said? Whichever one, a good news report isn't necessarily gonna overshadow that, right? So just keeping that in mind. But point of what I'm saying is there's been a lot of high impact news reports, and majority of them have been negative. Okay, so we have to keep that in mind, along with the political tension, right? And that, in an essence, is why the market's been going the way it's been going. Okay, obviously, anyone can say that, so now it's time we take that information and we go look and we apply it in the real market. And more importantly, what we'll do after that, let me put my desk down a little bit. I got a standing desk, guys. So if you look, we're going up high, and now we can go down low. So, I got that a couple weeks ago, but I just thought it was funny. What were we saying? Oh yeah, so now we're going to take that information that we just went over about the fundamental and the political tension. Obviously, I didn't go and tell you guys exactly what's happening in the tariffs, and what, who and what and when and why. You know what I mean? Because I can't even really answer that information for you myself, right? You know what I'm saying? All I know is that it's happening, and that's negatively affecting the dollar right now in an attempt to bring more production and more growth on the U.S. economy, where it's going to create more jobs and create more labor and create more opportunity here in the U.S. by discouraging people in companies in the U.S. from outsourcing to overseas companies, pretty much. That's what the whole goal of it is. And so we're devaluing the dollar right now because of these tariffs, and in the long run, in the next 3 to 4 years, in the next 1 to 2 years, maybe, who knows, the value of the dollar will gain exponentially compared to right now, because of the fact that we're not going to outsource for parts and labor anymore, or for supplies and labor anymore. We're going to be primarily doing that in-house because of how expensive it is now for people to do business with other countries. For example, for people in China, right? If the China tariff goes out and it legitimately is 125% more expensive, that's what a tariff is, right? So when Trump is announcing a 125% tariff, that is not saying people in China don't get affected at all directly, okay? If this is China and this is America, right? And this is an American business, and that American business saves money by doing business with China. What America basically is doing is they're putting a wall around this business and around every other business. And this tariff is saying, hey, business, if you continue to do business with China and you're buying computer parts from China and you're bringing them back to the US to put them together and sell a computer, what you're going to have to do now moving forward is when you go get this computer part and you bring it back to America, you are going to have to pay whatever the cost of that part was times 125%. So let's say, for example, that computer part costs you $10, right? And you're bringing it back to the US to sell it for however much. Okay, you're going to have to pay a fee now of $12.50 on top of that $10 that you just paid, right? So now let's say, for example, they were sourcing those parts for 10 and selling them for 25, right? And they were making, a decent profit, right? They were getting, 120, more, they're over 100% return on their money. Now what is going to be happening is, and they're selling it for 25, they're buying it for 10, they're profiting $15, okay? Now, when they go buy it for $10 and they bring it back to the US, they're going to have to pay an additional $12.25 or however much it is. Yeah, whatever. I think it's $12.50 or whatever. Okay, so now instead of, and they still have to sell for $25, okay? So now, instead of them profiting $15, they're going to profit $2.50 is what they're going to profit. So now what's going to happen is they're going to say, damn, I kind of don't want to do that, right? Because I'm losing all my money. The company needs to make money still, even if it's, whatever, they need to make money. So what they're going to need to do is they're going to need to stop doing business with China because they don't want to fall victim to this wall, right? China suffers from this because now they're not getting sales. They're not selling shit to American people anymore. And majority of our products come from where? China. So the bad part immediately for us as citizens on how this affects us as citizens, okay? You and me bill payers, all right? How this works for us and how this affects us, okay? And then after this, I promise we'll go into the charts. But again, it's important for you guys to understand this, especially for those of you guys that have some money and you have money invested in the markets, or you want to put money in the markets, or, some of you guys have, retirement accounts from your jobs, or, some of you guys work jobs, you know what I mean? Not, and you're still in the journey of entrepreneurship to where you aren't self-employed yet, which is fine. But if you have a job, and you're limited on your income, it is going to be important for you to understand, what this is and how it's going to affect you. Because how it's going to affect you is this, right? So businesses are going to say, man, I don't want to. There's two options for the company, okay? They either eat the cost or they raise the price, right? And they're not going to eat the cost. I promise you that, right? So what's going to happen? They have to raise the price. Who's going to pay the inflated price? You, right? So now if this company is saying, man, okay, well, I can't go get stuff from China anymore for $10, but I can get the same computer part in the US for $15, okay? So now they're going to have, so now their cost of goods just went up by $5. It went up 50%, okay? This is a very rough example, but in concept, okay? What's going to end up happening now is, let's say you're buying the computer or the computer part or whatever for $25, like we mentioned in the beginning, okay? You're paying $25 for the same computer. Nothing's changed for you. It's the same computer part, okay? But now, because this company can't get their parts for $10 anymore, they have to pay $15 now. They're going to raise the price of this computer to $30. They're going to raise it to $30 now. That way you, the consumer, offset this $5 difference, okay? So now for the same goods and for the same service, you're paying $5 extra now, okay? But what isn't happening is your job is not giving you $5 extra now. They're not giving you $5 extra per hour or $5 extra per day or any amount of money extra because of this scenario happening. Matter of fact, probably what ends up happening now, and this is what happens, and this is what's known as a recession, right? And this is what's known as a depression, is what could happen, okay? Is when this company, now that they're having to pay $15 for goods, yes, they raised the price, okay? But they're still probably going to be expecting costs to go up even farther now, right? Because now the U.S. companies that are supplying these pieces for $15, they're getting influx of demand, right? So now that they're getting an influx of demand, they're probably going to raise the price even more. And when they raise the price even more, this company is going to have to start paying a higher price. When that company starts having to pay a higher price, they can't just keep raising the cost over and over and over. So what do they start doing? They have to start firing people. Okay, that way they can afford to maintain the company. So now the least productive people, or the people that are most replaceable by technology or AI, gets fired. Okay, and now those people that get fired, they go and they file for unemployment. They go, or they don't work, or God forbid they go homeless or whatever. And now that's what it cycles from there. So what Trump's gamble is pretty much, and he seems confident in what he's doing, is he wants to stop that cycle where, yes, the cost of goods are going to go up in the U.S. right now, and the cost of material and labor and everything is going to go up here right now. But his claim is that pretty much, the U.S. has more than enough material and labor to sustain itself, which is technically true. So once everything kind of solidifies and people really are solely doing business here in the U.S., the idea is that people won't get fired and people won't lose their job, and that even though the cost of goods will go up, that income will also go up, or that the value of the dollar will go up, meaning that inflation technically will go down, meaning that your dollar, even if you're not making more money, your dollar has more buying power. So even though, it seems a little risky right now, it's in hindsight. That's the whole goal. That's the whole scheme of everything, is of what's being attempted right now with the tariffs, is they're shutting down people in the U.S. doing business outside of the U.S. to encourage people to stimulate the U.S. economy, to encourage the economy to be self-sufficient on its own and make money on its own here. So that's what the whole plan is, right? And now, Ollie, how does this affect the charts? Okay, well, let's get into that, right? So let's delete all this stuff. And now let's go into... So to sum everything up of what I've been saying, for those of you guys that really just care about trading specifically, this is just a bunch of turbulent times is what it is, pretty much. It's just a bunch of mumbo-jumbo that's causing the market to go up and down much faster than it usually goes up and down. Is what all this is. So I don't want to delete all my drawings, so I have to delete these one by one. But, you know what I mean? So really how that affects us right now, to be completely frank and honest with you guys, unless you were rich, it really doesn't. If you had a portfolio set up, and like crypto for me, my crypto portfolio is down right now, but I hold crypto for the long term. Like again, next 10, 20 years type of deal. So stocks, I really don't own any. I don't own any stocks actually. So it doesn't matter for me about that. I'm just a trader. I do have a high yield savings account, but that's, backed by prime interest rate. It has nothing to do with the stock market or with any other type of market. So in regards to that, I'm kind of chilling. So I haven't been affected, but I do know a lot of wealthier individuals that, are in my network, or that I'm in their network, I should say, that, have messaged me, asking for, what to do, or what's going on, because they have more significant income, and it's, I can't know. Anyone that says they know is kind of just, again, speculating. We are in an uncertain time, and the next 3 months especially are going to dictate a lot, pretty much, and dictate what is the market going to go up or down, is really what it's going to dictate. Is the value of the dollar going to go up or down? And if the value of the dollar goes up or down, that's going to dictate whether the stock market goes up or down. If that goes up or down, that's going to dictate whether the crypto market goes up or down. If those go up or down, that's going to dictate whether mortgage rates go up or down. That's going to dictate whether housing prices go up or down. That's going to dictate whether gas prices go up or down. It all cycles within each other. So, it's just a matter of seeing where it goes, really. So in a matter of us trading and us day traders, right, what can we expect, and what are we looking for, okay? So, the dollar, okay, so let's just take a look at this here. So, because it's very tricky, because I don't know, right, you know what I mean? So I'm analyzing this myself with you guys live, okay? So we're going to do a full breakdown live, because it's Friday. We'll go over our previous trades that we took this week in a minute. We'll kind of brush through that, because all of them are very simple. For those of you guys that know me, I trade very, very simply. Two main things, and I have a series of things aside from that. But I use fib levels. I have a good settings, or I have good settings for my Fibonacci retracement tool. I love fibs, and I use psych levels. So I'm a psychological level trader, and I use Fibonacci sequence to help me find my entries. Very simple, very played out, and very effective, right? It works, okay? And so that's how I like to trade. Keep it super simple. And we'll go over my trades this week. We only lost one trade. I think we took 6 trades this week, and I think we lost 1. And that one loss was like my first loss in like 2 weeks, more or less. You know what I mean? So can't complain. You know, people think I'm lying when I say, you know, we have like 80 or 90% accuracy, but, you know, it's the truth. You know what I mean? I'm not gonna lie to you guys. I have been a little sloppy when it comes to my journal, right? But my journal is the live streams, because I do them all public and live and recorded. And my journal is the Discord group, because I send those trades every single morning. So we can look back at those. But what I am going to be doing is I am going to be connecting my account to my FX book. And I'm going to be documenting my account there. And I'm also going to be documenting my account on an actual trading journal as well. That way, you know, we can track it together. And moving forward, every week or every month, we'll go over that. I used to do that when we first started Cashflow, was keeping an actual win record. You know, we would announce that every month, you know, how many trades out of how many trades. And it's always been a high consistent win rate, you know, so I'm excited to start doing that again. But to get back into the charts. So, we have not been this low in a price since September of 2024. I went 2 and 3 this week. World's smallest violin. That's funny, bro. Nah, you're killing it, man. That happens to the best of us, bro. And again, I don't know. I'm pretty sure you're trading stocks when you're trading futures, bro. We can talk about that on a Zoom call or whatever. But again, it moves differently than Forex does. So again, if Euro US is going down, typically that means like S&P is going up. No. If the DXY, if the dollar is going down, S&P is going up, typically. But in a time like this where everyone's liquidating their stocks and immediately going to a different currency, then it's, you know, it's a little tricky. So they're definitely inverse for sure. I would say inverse. But the dollar though, this is the lowest that we have been trading since, again, September of 2024. So remember how I just said Q4 was very aggressive for the dollar. This was all Trump being announced president. I'm pretty sure. I don't even remember when Trump got announced president. Pretty sure. This is all Trump winning the presidency. This 10,000 pip move, or I'm pretty sure that would be. It has to be 10,000. Yeah, 10,000 pips, right? So in that amount of time, it took it pretty even actually. October, November, December, January. Yeah, so as fast as it went up is as fast as it came down. It's actually pretty interesting. Not as fast, actually. This was 90 days, 3 months, and this was... So right at 108 days. So right around each other. But point of what I'm saying is, yeah, these last few weeks, though, have caused some very aggressive moves. So if we go look at this week specifically... Let me get rid of this. Yeah, so as of right now, so this week is starting right here. These candles. 1, 2, 3, 4, 5, 6, 7. Those candles. This is our trading week. Okay. So right here. So first thing, well, I mean, I'll talk about each trade broken down in general, because basically how we wrote it is there was a little bit of an imbalance right here. And then as soon as we hit that, this was, I'm pretty sure, we bought down here just because of how low it was. I'm pretty sure the first trade was like right there somewhere. And then we had sold around there. But on Euro US, this is the dollar. So I'll go show you guys that in a minute. But yeah, as of right now, this is where the dollar is at. The dollar is below price 100. Each time it's been this low, it did shoot up exponentially. Right, last time was in December of 2023. The time before that was in July of 2023. And that was kind of the most recent times. The last time I crossed this price was April of 2022. And before that, it was a major resistance level back in 2020, but first when COVID first hit. So we are at a major, major, major key level right now. Right? Even way back here, 2015. Way back here, again, 2015. So where is it going to go from here? Honestly, I don't freaking know, guys. You know, because it's kind of... I don't know. You know, at a certain point, I didn't even start trading. When did I start trading? I started trading... legitimately trading, like, you know, I got into crypto and Forex trading around here. This is when I was blowing accounts, you know, back in the day. It hit this price a couple times, It was gone. You know, I was trading this whole time. This was all me learning phase, becoming profitable. I quit my job around here. You know what I mean? We've only been at this price a handful of times. You know what I'm saying? In my trading career. So I only know so much. But based off of what's been going on, I think I think it is fair to say, right? Let's do this. Instead of me blabbering, let's just use the tools that I like to use. Let's see where we can see if we can find where the dollar is gonna go. Where DXY is going. I'd say this will be the impulsive move. So 95, 96, 95. Let's see what we can find in this zone, in this area. Let's put a little rectangle right here. So there's solid liquidity right there. You can tell right here. There's liquidity right there. Retested it right there. Support it a little bit. Let's keep it dragging out. I'd say there's solid liquidity there, right? We can pretty much see, you know, where there's additional support, resistance, whatever you guys want to call it, right? So let's say that our target price for the dollar was 97 bucks, 97.50, right? And that kind of ties in with our whole number zone as well, if you want to call it like that. This is 100. Let's duplicate this. And also, this is going to be our analysis. This is our analysis. We're analyzing it right now. All right. So let's put this at 97.5. Right around there. Right, that's our next. We could say our actual main whole number zone would be 99, 98, yeah, etc., etc. But in regards to actual whole number zone, I'd say 97.50 would be a good quarter level. So basically what that means is that price is probably going to continue falling off. Maybe we'll go back up a little bit, but depends what happens at this key level. Again, what happens here at 100. This is a key level that we're at right now, and everything kind of depends what happens from here. Did we dip down below it already? Yes, and we did that strong. So using that to my advantage already, it can maybe be assumed that it's going to continue going down, right? So it can maybe consolidate a bit, maybe it'll go up, but throughout the next couple weeks, I think it's fair to assume that we can target a 97.50 price, right? And if we want to use a more specific fib structure, let's delete this one. And now let's go most recent impulsive move. We'll measure from here to here. Why? Because this is where the market moved this week, right? Or these past couple weeks, okay? So using this to our advantage, right? This seems actually a little bit more likely. Now that this is the move, we're probably going to retrace to here and go here and go. I personally like option one more. Why? Because of how aggressive this move was, how fast the market's been moving this week. I don't think we're gonna have a massive pullback, but I do think it's likely that we can continue to pull back to this retracement zone 1, and then we'll target down to create those lows, right? So now that's our prediction for EU. I mean, that's our prediction for the dollar itself, okay? That we're gonna continue to see lower lows, and we're gonna continue to sweep the next liquidity zone. Right, there is some liquidity. It depends on where you guys want to look at it. So what I'm going to do to be safe, right, since I like to keep it simple and I don't like to stress myself, because would we say the liquidity is right here, right, where these wicks are, or would we say the liquidity is right here where it consolidated, right? Man, how do we tell? How do we know, right? Instead of trying to stress my life out, let's just put it in the middle, right? Let's just put it right there, right? Let's just put it right in the middle of our 97.50 whole number zone. Now it looks like it makes a lot more sense, right? Where the market would come up to the liquidity zone and it got smacked down. It tried to, got smacked down, came into it, got smacked down even harder, came up, retested it a couple times, and then we went. That makes sense to me. I'm happy with it. So I'll say that's our zone now, right? Keep it simple, okay? So now we'll extend this. So my prediction is that within the next couple of days, probably within the next week or two, the next trading week, that the market will work its way. We'll do this and we'll leave this here and we'll see how accurate we are. and we'll move on to Euro US. All right, so we got our fib, 0.1, 0.2, boom, boom. So we'll say it's going to go down to that price, right? How far away is that from current price? Another 200 pips, more or less. So that's a lot. But depends on what happens this week. Okay, so now taking that information into consideration, right? You guys see how exactly opposite they are of each other? You see? This is Euro US, and this is dollar, right? And now on Euro US too, you know, sometimes I consider becoming a swing trader. Because if you guys go back and you look at the live streams, I called a beautiful, dude. I'll put my drawings back on that way you guys can see. But, like when the market was like down here, bro, like right over here, I said that the market formed a nice head and shoulders or double, triple bottom, whichever one I said. And, that we were expecting it to go up. I didn't expect that to happen. Don't get me wrong. I didn't expect this to happen. But I did expect, you know, I'm not going to say I did it, you know what I mean? But I did say that it was going to go up. And it went up, right? But I think it's funny saying that because there's only two options of where it can go. It can go up or down. But the context of how I said it, you know what I mean? The context of how I said it. And it did play out exactly how we said it. So let's see if I have that on here. I don't have it on this one. Do I have it on this one? I have it on this one. You see? You see? Here we have it. Perfectly go. When we were trading down here. Right? I had it right here. On this break, I said when we broke this neckline. So this is where I was. This is so I used two different charts to trade on. But yeah, so these were our dubs of 2024. But whenever the market was this low, we did predict that it was going to come and break up higher. And each zone, we already had it marked up, right? If we look here, we broke this whole number zone, went to this whole number zone, came down to this whole number zone, right? That one is 750. Where did we go after that? We broke up to this whole number zone and retested the previous ones, and then we kept going higher and higher and higher, right? But that's on the daily time frame, so we're going over a bunch of stuff that doesn't really matter. Let's drop down the 1 hour and get into the stuff that does matter. Are these the same trades? Or I don't remember which ones I took on which analysis. Hold on, give me 1 second to see this real quick. Once it loads, okay. I know I did take these. So I think this is the one that I analyzed this week. There's that one. Yeah, I think this was okay. So I did on two different charts, alright? So, we took a total of, 6 trades this week. 6 trades this week. Yeah, then this is the fucking loser. Yeah, that's how it was. Okay, so, I'm going to try and go through this as fast, not fast, but as, fast as I can, but as detailed as I can as well, right? Each setup, again, keep in mind, okay? So, that you guys understand this, okay? Every single trade that I take is the exact same trade. It is the exact same trade. It's the exact same setup. It is the exact same scenario. Granted, take that with a grain of salt, okay? Because there are different contexts and there are different scenarios that involve the same strategy and that involve the same analysis, pretty much. In that sense, when I'm explaining these, the overall reasoning is the same. Again, fibs and psych levels. Okay? There are multiple other tools that I'm going to explain and use that help give me further confirmation. Okay? For those of you guys that are in the course, you understand this. I am a point-based trader. For those of you guys that are not in the course, I am a point-based trader, okay? So what that means is that if I have my overall analysis, as long as I have a certain amount of confirmations, points, then I am able and willing to take the trade, okay? The two most prominent ones that I like to use are fibs and psych levels, okay? Adding on top of that, we'll have market patterns, we'll have candlestick patterns, we'll have individual indicators, we'll have supply zones, demand zones, we'll have, is it an aggressive low, is it a weak low, is it a weak high, is it a strong low, is it a strong high, did we have a break of structure? I'll use all those other things in addition to gain confirmation / points, okay? So if we're referring to a 5-point setup, that means it's a very good setup, okay? If it's a 4-point setup, it's still a good setup. A 3-point setup is an okay setup, and anything less than 3 is bad. Very good rule of thumb, very easy to remember. Okay, I try not to put myself in a box, and I try not to constrain my mind on the opportunities that the market gives you, okay? So I'm saying this because, again, I'm going to go through these kind of fast, and I'm going to go through them kind of fast because the strategy is what I just told you, right? I use different tools to get an overall bias, and based off that bias, I will buy or sell. I'm very simple, and I don't overthink it, okay? The time frames that I like to use primarily are the 15-minute and not the 15-minute and the hour, the 15-minute and the 5-minute. And it depends, okay? The 5-minute I've been using a lot this week because of how fast it's been moving or how aggressive it's been moving. It's weird, right? And for those of you guys that have been trading for a while, I feel like you guys will know this as well. Where like sometimes when you're trading on the 5-minute time frame, a candle, like this candle, would be like 5 pips, okay? But this 1 minute, this one 15-minute candle. Oh, this is let me go to the 5-minute. That way I can give you guys a better example. Here, for example, we'll use this blue candle. Yeah, okay, same exact situation, dude. Yeah, this one 5-minute candle is 30 pips. You know what I mean? So that's why I'm like, damn, what the fuck, So that's why this week I've been analyzing on the 5-minute time frame a lot more because the pip count is a lot higher on the 5-minute time frame this week because of the volatility. Typically on the 5-minute candle, you're only going to get, 5 to 10 pips per candle max, really, typically. It's not that average, it's not that off, especially on a Forex pair. If it was gold or US 30 or whatever, maybe, you'll get an aggressive trade like that. You'll get an aggressive move. Not maybe, you will. You'll get an aggressive movement like that where you'll catch a lot of pips in a 5 or 10 minute period of time. But it's not really that common for Forex, you know what I mean? And especially for my style of trading. I consider myself a scalper, but, still to get 30, 40 pips, usually it takes, an hour, maybe, maybe 2 on a normal New York session, right? But this week, bro, it's been moving, 50 pips, in 10 minutes, literally. So this week specifically, I've been dialing down a lot more to the 5-minute time frame, and I've even drawn fibs on the 5-minute time frame a couple times. But on a normal, not normal week, because, it's going to be like this for the next few weeks probably. So I haven't drawn a fib on the 5-minute time frame virtually ever, to give you guys that context. So it's like, you know what I mean? Who knows how long we're going to continue to do that. Typically, it's like the 15-minute time frame. But what I notice is when I'm drawing them on the 15-minute, it's like 100 pips to get to the gold zone. And it's like, damn, dude, that's 100 pips, of trade opportunity. So maybe it's better if we shrink it down and we analyze the 5-minute. Okay, and the trades have been hitting still the exact same way. How long is this type of market environment going to last? I can't answer that. So instead of me trying to give you guys a predictive future, why don't we just analyze today, right? And so that's what I've been doing. Instead of me trying to think, oh, well, how long is this going to happen for? It's just, okay, let's just trade today. Usually I don't trade the 5-minute time frame. To analyze, I'll take an entry on the 5-minute time frame, but I don't analyze the 5-minute. But if we need to analyze the 5-minute today, then we'll go ahead and we'll do that. You know what I'm saying? Again, I don't like to put myself in a box, you know, because when you limit, and that's how I like to think about it, and then we'll get back into the charts. I consider myself an intelligent individual, and I consider all of you guys intelligent individuals, right? Why are we intelligent individuals? Because we have the human brain. Okay, the human brain is limitless in what we can understand, right? So if we try and limit our understanding and we limit what we allow ourselves to see and what we allow ourselves to do, you make trading so much harder. You know what I'm saying? I'm not saying learn every strategy and trade every strategy at the exact same time, but just be open. The most expensive thing in the world is a closed mind. You know what I'm saying? Because if I would have kept analyzing strictly on the 15 because I said that's what you're supposed to do, then I probably would have only taken one trade this week or maybe 2 trades this week, which is still fine, and they still both would have won. I'm not complaining about that. But if the opportunity is there and all that's required is for me to just do a little shift, change the perspective a bit, then by all means I'll do it. I'm not changing my entire strategy. I'm just dialing in a little bit more because of the market situation. You know what I mean? So that's all I'm saying. Okay, so to go back into this, right, let's go to our first trade of the week. Right, we'll go back to over here. Let's go ahead. We'll do replay, and I'm going to run through these, like I said, relatively fast. If you get confused, feel free to ask your questions. Please. Please, please, please. All right, so this is where we were, right? And I'm going to be real with you guys. When I get on here, you know, I don't really even think about half the crap that I tell you guys on these calls. You know what I'm saying? It's like, I'll think about them when I'm, like, done in the trade. I'm like, now I'm thinking, okay, why am I in the trade? You know, why did this even happen? But when I get on here, I got on here, again, this was Sunday. I got on here Sunday night, and I saw, okay, where are we at? And I always start with technical analysis. You can always still trade technical analysis and, you know, your charts. Nothing wrong with that. Again, there's another half that is more important. Okay, but very simply, right? It was very simple. Oh, now I remember to mention this as well. Okay. So, when I got on, so this was the week before. This was last week's call that I didn't do, unfortunately. But that was right here. All this was the week before. Okay, a lot of other crazy movement as well. A lot of impulsive upwards movement. Okay, so what did I do? Very simply, I got on here. I said, man, okay, I already missed all this stuff. It's fine though. What does this look like though? It looks like the market went up, and it looks like it did something called a retracement, right? It looks like it did something called a retracement. So me understanding what a retracement is, let me use my Fibonacci retracement tool, right? So we'll come here, we'll go from the bottom to the tippity top, and we'll put that to the right. That's what I did to start out with, okay? Why did I do that? Because we had a recent low to a recent swing high. Should I have done it smaller, more tight? Maybe, yeah. Okay, but again, this was helping me get my bias for the remainder of the week, and this was my first setup of the week, and I just kind of wanted to see where we were at, okay? So doing that, I looked in a little closer. We zoom in a little closer. I noticed something off the top, okay? Couple things. Well, this is the main thing, right? We're in what's known as a wedge. We're forming a wedge, okay? What represents a wedge? So a trend is when you're having a higher high, higher low, higher high, higher low, lower high, lower low, lower high, lower low. Okay, there's clear direction. A wedge is when you have a high, low, lower high, higher low, lower high, higher low, lower high, higher low. And that means that they're eventually meeting up, okay? When there is stuff converging and meeting up, think about it as momentum building, okay? There's always energy building, okay? And I heard this principle once, and I heard this from Myron Golden, for those of you guys that study Myron Golden, where he talked about, he spoke with a physicist or something, and it said that a law in one field is applicable in a law in any field, right? So the law that we're talking about in this example is kinetic energy, right? Energy that is building up needs to be exerted, right? So again, if you, the easiest way that I always like to think about this is like, I guess like, I don't even know, like a pinball or something. You know, if you just bounce it around a whole bunch of times, eventually it's going to go crazy, go somewhere, right? So that's exactly what happens. Same thing with the concept with the Bollinger Bands, right? So it's the same concept when a wedge pattern is forming, okay? So what do you mean, Ollie? What do you mean there's higher lows and lower highs? What are you talking about, bro? Right, so very easy, guys. Pay attention, right? Low, high. Higher low, lower high. Now we connect them, right, if we want to. Let's go here. There's our top trend. Here's our bottom trend. Does that not look like a chip? Does that not look like a wedge? Does that not look like pressure building up? Right? So now let's clean it up a little bit. Instead of using just a drawing, let's add a trend line. We'll do a top trend. Put it right there. Make it look nice and pretty. We can even put it back here if we wanted to. A call. Let's see who it is. Hello? I'm currently on a live stream, my friend. Can you give me a call back? Awesome. Anytime later tonight, my friend. Thank you so much. That's funny. I've been getting a lot of spam calls lately. So, but anyways, so this is the top trend line. This is our bottom trend line here. Okay, and so this is our basic, this is everything that we had. This is everything that we had at this point in time. Okay, we were trading in the middle of a gold zone, and I saw that we were getting a lot of buildup right here because we were in the middle of a wedge pattern, right? We looked up the exact same thing on our stochastic and our RSI, and we noticed the same exact thing was happening, that we were having buildup here, and we were having buildup on the bottom. We were having buildup pressure on the bottom, buildup pressure on the top, okay? Looking in closer, I looked at where we were, and pretty much how this went is I just targeted the bottom. I'm trying to remember my mindset on this trade. But I knew that we were hitting the top and the bottom of this channel. Right, bottom, top, bottom. We hit the top already. And then we broke down this trend. So I put a little mini trend line, and that's what made me decide to get in. Is we had this little mini trend here that we were following. We had already hit the top. So I figured, okay, let's just enter here. And then we went to see how it went. So that was the first trade. That one hit take profit. Then we waited. Okay, this is the first trade that I sent out. That one was our Tuesday trade. Very simple though. It was really that simple. The gold zone necessarily had nothing to do with this setup, but that was my analysis. Okay, it was there because I was expecting it to go up, but I didn't expect it to go down this far. I was just expecting further consolidation to happen until eventually where we broke out of the gold zone. Okay, and I still held that analysis, right? I still thought that. So Tuesday happened, I waited. We came to this 1.9 thousand level, which I knew was a heavy psych zone, so I decided to wait because I figured, okay, we're at this heavy demand zone, heavy psych zone, heavy support zone. It's probably going to go up. So I took profits, and we decided to wait. We came back into the triangle, and we started getting our move here. And then this is where we decided to enter, right there at this point. It started coming back up. So this is what's known. So if you guys don't understand this, go watch the video in the course. This is what's known as a fake out. Okay, this is what's known as a liquidity grab. This is what's known as a stop hunt, whatever you want to call it, fake out, whatever. Okay, it's one of those words. A perfect example of one of those words. If you know, matter of fact, actually. Okay, so this was for people that were buying here and had their stop loss. You know, had a nice big take profit, and they had their stop loss right there. And what this did, literally, is it stopped out every single person that was in this similar trade, okay? And took their money, right? It sent the liquidity down. Where did the liquidity go? To the next psych zone. Exactly, to the next psych zone. Okay, so we keep it simple. We said, okay, price hit our next psych zone, so it's probably going to go up. Let's wait. Okay? We could have even entered here if we wanted to. All right, you draw a fib here. Boom, boom. What did it do? Boom. Retracement zone 1. Take profit 1, 2, and 3 got hit. Beautiful entry. I didn't call that one, though. I didn't see that one at the time. Okay, but we came up. I saw we broke above. So now the second time is usually the actual breakout, not the fake out. So we broke out that time, came down, retested, and then we entered on the retest. So we enter on the retest. Now let's see what happens. Now we're riding the gold zone momentum. We're riding the retest. We're riding the gold zone. And we're riding everything else. Take profit got smashed, and it kept running. We could have kept holding it. I'm not going to lie to you guys. I didn't hold it. I'm going to be real with you guys. I didn't hold none of this. Right? I could have, but I didn't. Right? Very easy. Like, we want to use a fib again. If I wanted to enter, draw the fib from most recent move, most recent high. Where did it go? Boom. Retracement zone 1. Take profit 1, 2, and 3 got hit. Same exact scenario, guys. Same exact thing. If we wanted to add on some stuff, triangle pattern, you can call it a bullish flag. You can call it, I'd say that's a flag over a triangle. Whatever you want. I'd say that's a flag. And then, boom, 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 break, retest of the flag. That add on the fib. It's really easy, guys. I'm telling you, once you just do it so many times, it does get so easy to find the analysis. And then again, when you're wrong, because now we're going to get into the trade that I lost, right? So right now we're 2-1 for the week. Now we're about to get into trade number 3, right? Where we lost this one. But again, you just get so much confidence in it because it's right always. You know what I mean? So when you lose, it's like, what's the point in even getting upset about you losing it? Yeah, you get a little emotional. It's like, oh, man. Me, I get emotional because I lost for you guys. You know what I mean? I'm like, damn, bro. They're going to hate me now. The students, they're going to think I'm a loser. They're going to, you know, whatever, mumbo jumbo. But I don't think you guys are going to think that about me. I'm joking. But what was I saying? Yeah, but you don't get worried about it. You know, I just get like, man, you know, that sucks. Maybe someone took the trade and, you know, they ended up, you know, maybe they lost it and they, you know, they're mad at me or something, you know. So it's like, you know, but you lose a trade, it happens, dude. You know, and then that's where, again, I don't lose that often. You know, just it's simple, you know, but I wasn't always like this, you know, don't get me wrong. When I first started teaching even, I would send out a bunch more trades than I send out right now. I would send out like 2-3 trades per day, you know what I mean? And then at that point, I was losing like 1 trade per day. And at that point, it was like, okay, well, that's a little bit much, you know what I mean? So then you just simplify it all, man. You know, you simplify it, you break it down easy, and you don't stress your life out. You know, I used to be a lot more of a, I like scalping, don't get me wrong, it's fun. You know, like the other day, you know, I made the other day, what day was it? I think it was Tuesday or Thursday's trade. It was like 287, dude, in like 3 minutes, 4 minutes or something. The market just fucking went crazy. And that's cool to see, don't get me wrong. You know, but when you stop chasing that and you just look for simple setups, it makes it a lot easier. You know, and you get used to finding the criteria, right? Because you get used to it. You just get used to it, to be honest, you know, so. Right, let's see here. On this move, what we ended up doing, right, we'll go here. Oh no, is this the trade I lost? I think it is. Yeah. I don't even know why the fuck I had this fib drawn like that. Why did I have this drawn like that? I drew it from high to low. Let me go back in, because I don't even remember why the fuck I took this trade. Honestly. Let's go see. What day was this? Friday, or Wednesday is what it was. Let's go look at the one I lost. Because then I got back in. Okay, here it goes. Oh yeah, this was a high risk sell. I presently went with 20 pull back. Overall, we'll drop a bit back closer to 1,000 retest. If we're moving, a slight divergence on our side and Stoke. What time frame was that? 15. Okay, so let me go back to there. What the fuck? That doesn't look nothing like the market. I guess I'm just trading this. Yeah. Okay. So let me put the market back to here. And I was thinking what I thought. Let me confirm. Yeah, that's where we were. Yeah, I thought we had a double bottom or double top. Why did I think we were going that much farther, though? Oh, I mean, we did, technically. I don't even know what I'm talking about. Okay. So, pretty much, guys, okay, get this one out, get this one over with. I thought we had a double top, right? Double top forming, which I knew was a stretch. You know, I knew I was pushing that. And then also I was forcing to see an opportunity. This one's, okay, I know what happened here now. I know what's going on here. I know the truth. There we go. Okay, so, yeah, I thought a double top was happening. You see, this is why I lost this trade, though, to be real with you. I had no valid entry. I drew a fib. Let me go back. Let's see, we were right there. Okay, let me delete this crap. Let me delete this one. Boom. Right, so I drew a new fib here. Okay, I drew this fib here, and I'm thinking, okay, well, market came up, and it's going to be in the gold zone, and then this is where it will go up again. But my thought process was we had a double top. I believe also, yes, here we go. We had divergence on the top as well, and we had divergence on the bottom. So that divergence gave me further ideas that we were going to go up higher, or that we were going to drop off and go lower. I thought we were heading towards the EMA line. I remember that as well. That's useless. Man, that's useless. So I had that along just with the break of the 1.5 zone. I said I thought we were going to retest closer to the 1.1 level. So this one was just a gamble sell, to be real with you guys. That's why we lost it. The confirmations I can give you guys, double top 1, EMA line 2, divergence 3. So again, 3 is an okay entry. So we got okay results, you know what I mean? So we didn't get good results. So market went down, came up, stopped me out, and then it goes in profits, stops everyone out again, and then it melts again completely. So again, overall, was the trade right? It's debatable. It's debatable, guys. It's debatable, right? Because the reason why this volatility happened right there is, again, political stuff. It has nothing to do with me being right. It has this stuff to do with the economy and with news. So was I right? Maybe. Should I have waited? Probably. Right? Because now if we were to see this, like let's say I waited till, let's say I didn't enter right then and there, and I waited a little bit longer. What I could have done, I mean, realistically, dude, I could have done it either way. This was our entry. What I should have done, I could have drew a more recent, smaller fib. Let me delete this one. This is what I should have done, guys. This is what I, you know, looking back, this is what I should have done. I should have drew a new fib from here to here. Why? Why would you draw a new fib there, Ollie? Why? Tell me. Because we formed a new low. Okay? Low, high, low, high, low, lower high, lower low. Right? This low is lower than that low, and this low is lower than that low, meaning it's a break of the structure. We already went over that before. I'm not going to go over that again, but it's a break of structure, so the fib is valid. Fib is valid. Now what we would do is we would wait for an entrance to our gold zone, and we would target take profit 1, 2, and 3. Now we were to do it that way, and we were to enter a sell position here, put our stop loss right above there, 15 pips, target down here. Now let's see what would happen. Right to the gold zone. And that's a beautiful trade. Right? So, again, very simple. Right? So me looking back at my mistake, what was it? My mistake is that I didn't have a valid fib level, and I went opposite. So if we go back to my example, because this is what I should have done. This would have been a beautiful trade. Right? Another dub. Dub city is what that would have been. right? But instead, what we did was this, right? I thought I had a double top pattern forming. I kind of didn't. And I was just expecting the price to violate the gold zone and go down to this next retracement zone. That was what I was expecting it to do. And it did do that, but it didn't do that because of a buy Fibonacci, right? It didn't do that because of the because of a buy fib. It actually did it because of the sell fib, because of this low. I say MLI. I still need to stop saying but because of this move right here is why the market went down here, not because of this move right here. Does that make sense? Let me know in the chat. Does that make sense? Sound like I'm not making sense. My reason for losing the trade is I traded based off of this when I should have traded based off of this. If I would have traded based off the most recent move instead of the second most recent move, then I would have won the trade. Okay, but using the same exact analysis, the analysis wasn't wrong. And that's another thing I should mention as well. The analysis wasn't wrong. The context of the analysis was wrong. No. The strategy wasn't wrong. The application of the strategy was wrong. That's what I was trying to say. Right? Because if I would have used fibs the other way, the correct way, it would have worked in with my whole number zones. It would have worked in with every other indicator and tool that I had. And it would have worked better in with my sell idea. I kind of already had a feeling that the market was going to go down. Okay? And it did. But because I was trading a bullish fib sequence, my stop loss got hit. Even though the analysis was right, the idea was right, the application of the strategy was wrong. So that application being incorrect caused me to lose the trade, right? Because again, I was selling. I had the right idea to sell, right? It's not that, I was wrong completely, but what I didn't have mapped out was the correct retracement zones, right? Because if I would have used the correct retracement zone, I would have entered on the retracement instead of getting stopped out from the retracement. Okay, so that's my takeaway for this, for me personally, is that I should have analyzed the most recent move, and I should have paid, really what made me, honestly, if I'm being real with you guys, probably the reason why I didn't do that is, let me go back a little farther, and we'll look at that together, why I didn't do it. Let's say the market was right here. I probably, honestly, I didn't think to mark this as, I don't know why, it looks clear as day right now that I'm looking at it. But I probably didn't, look at how this low was lower than this right here. Looks fun, looks like a smiley face. But, I just didn't really pay attention to that. Because if I would have paid attention to that, I would have noticed that it was a break of structure right there. And the break of structure is right here. Even if it's a small break of structure, I should have noticed it and said, okay, oh, well, that's a small break of structure right there. Is this low lower than the previous low? Yes. Where's the previous low? Where's the real previous low? Right here. Where's the previous high? Right here. Where's the previous high before this high? Here. So now we're moving down. Me knowing now we're moving down, what I would have done is bearish fib, enter on where now that it's a bearish fib, what retracement zone will we enter on? Well, this doesn't really look like a super aggressive move to me, right? We came down, traded here a little bit, and then we dropped off, traded here a little bit. I wouldn't say it's super aggressive, so I would probably, me being realistic, I'd probably enter right here, right in between the zones. Enter, boom, right there. Stop loss, again, 15 pips. More or less. Right above the next zone. And then you would just target the low. Target whatever take profit you want. Make it a 3-to-1 at the bare minimum. Make it a bare minimum 3-to-1. And then you're in. You're in there like swimwear. So, now we know. right? But that was my loser of the week. Transparency is key. You know what I mean? I gotta be real with you guys, right? So I make mistakes too. You know what I mean? But the difference between me and everyone else is I look at my mistakes and I figure out why I made a mistake. And then we fix it, right? So those were our trades here. Now the next 3 trades were on my next... Hey, can you look at that shit? Can you believe that shit right here? Look how high that thing went, dude. That's crazy. The market went all the way down there. And all the way back up here. And now look at this too. Look at this too. This original fib that I drew. If we extend it. It still played out 100% true. We had to go to a higher time frame to look at it. Right? Let's look at this fib right here. Let's make it nice and clean. That way you guys can see. We're nearing the end of the call too, guys. Don't you worry. Right? We'll make that our gold zone so you guys can see it nice and clear. Right? Look how picture perfect that fib is on a macro level. This is what I was talking about. That if I would have taken this trade, yes, it would have been a banger. But me, honestly, I wouldn't have had the balls to hold it this long because of how many pips I would have been seeing move. I just wouldn't have. Honestly, I'm not gonna cap to you guys. Right? So, right, came up. Yes, we did some trading in the gold zone. Right? We did some bouncing back and forth. Yes, but why? Because of all the accumulation and the fear happening with the tariffs. Right? All of this stuff was happening this entire week, right? So all of this movement here is the fear, uncertainty, and doubt building up in the investing world, okay? So it makes sense, right? So we came up a little bit, got some more buyers in the market, came back to stop the rest of the buyers out, and then this time, boom, retested the gold zone once, and then fucking exploded, right? Take profit 1, 2, 3, 4, 5, right? Where's the next take profit? 6, right? What did I say that we're expecting the dollar to do? We're expecting the dollar to go down to here, right? If we just take a quick little peek, doesn't this amount of space look similar to this amount of space? You know what I'm saying? So, is it crazy? Who knows? You know what I mean? So, that's kind of where I'm thinking we're going to go, right? But I just want to prove that point. That original fib that we drew at the beginning of the week took the entire week to play out. But once it left the gold zone, it completely took off. You know, so, you know, pretty good setup. Now, these other trades that we took this week, we took 3 more buys after that loss. These are even more simple, even faster. Even faster. Oh, no, this one was a sell. Sorry. These are going to be even faster for me to explain because of how easy they were to take. Okay. So, right after that loss that I just told you guys, right after that loss where we just got stopped out, because here's the double top that I mentioned, and here's that liquidity grab, right? I hopped back in. I hopped right back in, and I used this as the fib structure, okay? I'll just leave it. I mean, I'll redraw it. This is happening fast, too. This was a fast, super fast analysis, and I went to this other pair to look at it because this one was already all mumbly-jumbly because I had already done analysis on it, right? But all we did, let's go back. We're right here. Impulsive move, recent low. Gold zone. We'll wait, we'll enter there. Stop loss will be up here somewhere. Take profit will be down here somewhere. Boom, it was literally that easy. It was that fast, that easy. And then I'm pretty sure this is the one that we sent out directly after. This is the one that we lost. Stop loss was hit. Whatever. Yeah, then right here. Looking at another sell opportunity. Just because I saw this big drop off that happened here, I said, okay, well, people are buying the dollar right now, so we'll go ahead, we'll hop in, we'll enter in on the gold zone. And then immediately after that, this one fucking ran, too. This trade ran. Yeah, this was a $300 trade. I'm gonna, what I'll do, I'll post it tomorrow. I'm gonna go over all the trades I took this week in the profit. I had over a $2,000 week this week. In all accounts. But yeah. So then this one, that one won. We kept going. Simple trade. Let's go more recent. Oops. Hold on, I gotta exit. And then these trades, honestly, were... I don't even need to do the replay mode for them, to be real with you guys. Or... I'll do it real fast. Only 2 more. Hope you guys are enjoying this. For realsies. I like doing it with you guys. Okay. So, this is where the market was at. We had just finished trading this movement. This was the next day. Right now, we're trading on Thursday. Oh, this is yesterday. That's crazy how fast time goes, right? But same exact thing, guys. Very simple. We were in a trend, right? We're in a bullish trend right now. So we made a new move. So I said, okay, let's draw a fib. Low to high. Right now, we're literally dead smack in the middle of the gold zone. So it's perfect. And we'll enter on the break. We'll wait, and we'll enter on the break. We entered on the break. And it went straight to take profits. So that was another great trade that we took. And then I'll mention this to you, for you guys that like to trade the OG style of trading. Right? This I would consider a Morningstar pattern. This bullish candle, I would like it to be a little smaller. But a Morningstar pattern is one of the most... This is a great morning. Here's a Morningstar. Here's a Morningstar right here. This is a Morningstar. 1, 2, and 3. That's a very bullish indication, okay? Morning stars and evening stars, those are like one of the first things. And I always like to look for them. That was one of the first things I ever learned when I first started learning Forex trading when I was fucking like 14. Was that my dad made me watch a video about, you know, candlestick patterns, and I had to rewatch that like 20 times because I did not understand what it was or like why it was called a morning star or like what it represented or any of that. And I still really don't know why they call it a morning star. I assume it's because like morning means up, you know what I'm saying? You know, sun goes up, moon goes down. You know, that's how I understood it. But yeah, so yeah, that would be a morning star. And this would be a variation of a morning star as well, where it's a bearish candle, right? And then a doji candle followed by a bullish engulfing is what a morning star is typically. In this scenario, it gives us more confirmation because of the doji spinning top. Here we have just a normal doji candle, right? But we have a bullish, doji, bullish engulfing. Bearish, doji, bullish engulfing. So those are it's another good sign that the market's going to go up. And an evening star is the exact opposite. But, yeah, that was the move, though, was we predicted this here, just using a fib. Gold zone, and if you want to use the candlestick pattern, you could say Morningstar in there as well. Right? Hit all our take profits. Easy peasy trade. We entered on the break. And we targeted take profit 1. And then we make it a 3-to-1 at a bare minimum, 15 pips. And then it goes from there, right? This trade, we started entering another scenario, very similar. Let me go to where the market was. Right? This is where the market was when we entered. Okay, why did we decide to get in on this trade? Let's delete the fib. Very simple. Exactly what I said to you on the first trade that we called out this week was the wedge pattern or triangle pattern or whatever. So this is what's known as an ascending triangle. Why? Because the triangle is on the top and on the bottom it's flat. Okay, so this is known as an ascending triangle. It's a bullish pattern. Okay, so what you want to do is you want to wait for the exact same thing. You want to wait for the break and ideally wait for the retest, right? You're not always going to get the break or the retest, but this is how I had it here. I think I had it like that. Yeah, it was like that. So that, and then what we did, we drew a fib again from this low to this high. Perfect. We're in the gold zone already. Perfect. We already have our pattern. Perfect. Now we just wait for the break. Was in some drawdown. And then, yeah, I didn't even have 58 pips, but whatever. And then that one ended off the week. I didn't trade today, but let's see where we ended off today. And then I'll do a super quick, super fast analysis of where we think it's going to go this upcoming week. And we'll see how that goes, guys. I'm not going to do that on the 15. I'm not going to do that on the 5. I'm going to do this on the 15 minute. Again, we're already expecting DXY to go down. So we're going to keep that in mind. Alright? We're going to keep that in mind. We're going to keep that in our back pockets. Same thing. Another pattern forming. Another triangle pattern is forming right in front of us. So, as you can see here. High. Low. High. Low. High. Now it's probably going to be low. High. Low. And then eventually we'll get a breakout to each, whichever side. I'm personally thinking it's going to go up. In this sense, what I would do, it's kind of tricky. You wouldn't want to draw the fib like from here all the way to here. I'd say that's too big. Let's see what this is telling us. That's useless. That says we need to go back to the EMA. That's useless. Weak high on the 15. What do we do? Where is it gonna go? It's just a matter of deciding where this move is starting. That's the tricky part. Where do we want to say this started? Should we say it started here? Or here? Because if we drew our fib here, which we very well could do, we're in premium discount zone. I think I'm going to keep it like that, honestly. We came down to the 78% off, 81% off, and then we started having some good bullish pressure, and then the week ended. So I'm going to say, based off of that, along with the fact that we have a weak high, that's a good sign for us to continue pushing up past this. And realistically, probably what will end up happening, based off the dollar losing strength, a little break, maybe retest the gold zone again a little bit. Same exact setup that already happened. And then we'll just target up here. You know, what price? Let's say if we're trading at 359 right now, let's target 5,000. So we'll enter on this break. That's a big trade too. We'll say 5,000. So this is going to be the whole week. You see how this is on the 15-minute time frame? And it's saying that that's 145 pips? That's crazy. So maybe that's a little too much. So on the 5-minute time frame, we'll be taking trades in and out between that. But overall, this would be the analysis. You know, on the 5-minute time frame, it says that this is a strong high and a weak low. So probably very well could be the exact same scenario where this could come back down, fake out everyone here, build out more buyers, take them all out with their stop loss, and then we'll see that happen. Maybe. So, one of those options. I don't see the price dropping, though. I don't see price dropping off. Unless something happens where Trump, you know, like, at this point too, even if he like took away all the tariffs and like says, okay, everything's fine, we're not going, nothing's wrong, that would cause even more uncertainty. So I don't see the dollar recovering right now. I'd say maybe we're gonna be in another bullish, we're gonna remain in the bullish trend, probably, for the remainder of this month. I think it's likely to say that at the least. But that's my analysis, right? I think we're gonna go up, right? So pretty simple. Throughout this week, I'll obviously be sending out my analysis, on a daily basis for you guys. Your job is to take the trades and ask questions. Win, lose, or draw, ask questions and make sure that you understand why you're winning, losing, or drawing. You know what I mean? The last thing you want to do, especially for those of you guys that are Cashflow students and, you paid for it, is not do anything. You know what I mean? The only way, because again, the only way that I have the confidence that I have in the charts, and the only way that I'm able to, it's one thing to trade on your own. It's another thing to send out trades publicly, right? The only reason I have the nerve and the guts to send out the trades publicly is because, again, the trades work. You know what I mean? The analysis works, right? The only way it doesn't work is if you don't do it. You know what I'm saying? So the biggest thing above everything else, you're going to learn how to trade, period. You will learn how to trade, right? The only way you won't learn how to trade, though, is if you don't trade. Okay, there's so many of you guys that go in this constant cycle, and I'm not gonna talk about this long because I'm hungry. I gotta eat dinner. But there's so many of you guys that I know that are students, and a lot of you guys that I know that are not students currently that are watching this as well, where you guys go in this constant cycle of you'll trade for a little bit and then you'll stop trading, where you'll trade for a little bit and then you'll stop trading. Right? Because maybe you'll run into an obstacle where you lose, maybe you're getting confused, maybe something's happening with family, and I get it, dude. You know what I mean? Like I said, I have a life too. I've had a pretty, traumatic, last couple of days, and I'm a very mentally tough person. I like to consider myself, but here we are. You know what I mean? Because the one thing that's true, regardless of life, is that the market does not care about you. You know what I'm saying? Market doesn't care about you, doesn't care about your family, doesn't care about your kids, doesn't care about your emotions, doesn't care that you feel bad, doesn't care if you feel stupid, whatever, right? The market's the market, okay? The only way it has power over you is if you give it power over you. So if you lose a couple trades or you're not making money and you get all crybaby, you're obviously not gonna, make money. You know what I'm saying? You're because you're gonna put this fear inside of yourself to not trade, right? And when the only way you don't make progress with trading isn't by losing, it's by not trading. Okay? Some of you guys will confuse losing with bad progress, right? And where it's like, oh no, I lost a trade this week, or I've lost a trade for 2 weeks. You know what I mean? Now I have to stop. Where that's the exact opposite. Where it's you've lost, for 2 weeks in a row, 3 weeks in a row, 2 days in a row, whatever. That's the opportunity that you have to learn what to do better. You know what I mean? The only way that I learned my strategy, you don't just wake up one day and poop it out. You know what I'm saying? You have to go through the works. How do you go through the works? I had to use a lot of different stuff, man, to get the knowledge that I have now. A lot of losses, you know what I mean? A lot of losses, and those losses, though, are the only reason why I have the confidence that I have now. Not because I'm used to losing, okay, but because by me losing, it gives me the data, right, that I need to improve the strategy. Winning does not help you improve, believe it or not, right? Winning every single trade is awesome. Okay, what information did I really gain for myself here tonight, though? Nothing. Okay, but that one loss that we went over today, what did I gain? What information did I gain from that? Right? That the strategy isn't what's bad, it's the application that matters. I should be looking at more recent moves instead of looking at previous moves to draw my fibs. If I look at more recent moves to draw my fibs, I'll get a more accurate reading on where the retracement is going to go. That's what I learned tonight from my loss, right? From my wins, I just learned I'm a good trader. I just learned the analysis was right. I just learned the market went the way it was supposed to go, right? But if I looked at that loss that happened on Tuesday or Wednesday, and I said, damn, bro, fuck, I lost this trade. It sucks. And then I stopped trading the rest of the week. what ends up happening is I'll see how much moves happen the rest of the week, and I'd be like, fuck, dude, the market moved 1,000 pips, in 2 days, and I quit trading on Wednesday. Now that sucks. I'm such a loser. I'm an idiot. I might as well not even trade this upcoming week. I'm not even going to back test this week. I'm not going to look at my journal. I'm not going to back test. This week was already a loss. I'll come back next week. And then Monday comes and you're like, damn, dude, I don't even, and then before you know it, you haven't been trading for a month. You know what I mean? And I'm saying that from experience because I know that's how it went, how it happened for me. Okay, so the only thing what I'm trying to get across from you guys, right? Because again, what the dude said, I'll post the training in the Discord because it was a good training. But a law in one field is applicable in a law in any field, right? So if the only way that you can reach success in entrepreneurship or in athletics or in whatever is just by remaining consistent and not stopping when everyone else stops, same thing with trading. You know what I mean? Just don't quit. You know what I mean? That's the biggest reason why all of you guys, not all of you guys, I don't like talking about you guys, but all of the other guys, you guys that aren't in cash flow, people that aren't in cash flow, right? That's why all of you guys don't make progress, right? And that's why all of you guys have this loser mentality, because when you face a difficult time or you face some struggle, quit. You know what I mean? And again, that is where the lessons happen. A loss is a lesson. Everyone says that. Oh, a loss is a lesson. Right? But how is it a lesson if you don't learn from it? How is it a lesson if you choose not to study it? How do you learn a lesson if you don't observe it? You know what I'm saying? But everyone just treats the loss as a lesson, as a mindset thing. Yes, it's a mindset thing. Oh, you don't want to say you lost. You want to say you're learning. How the fuck are you going to say you're learning if you're not fucking learning? You know what I mean? It's that simple. I'm saying this to you guys that are trying to learn, but then you quit when you're learning. You know what I mean? Because you get discouraged. It's a paradox. All of it is a mental paradox that you put yourself in. It's a mental prison that you're putting yourself into because of fear of you losing again. You know how silly that sounds? What are you guys expecting? That you're never going to lose a trade again? What do you want? Or what you have to even ask yourself that. Okay, well, if I'm not happy losing ever, should I be a trader? You know what I mean? Because you're never not gonna lose. Or do you want it to be like, man, if I can maybe like out of 10 trades win 8, are you happy with that? Do you need to win 9 out of 10 trades? Do you need to win 7 out of 10 trades? What win rate do you need to be happy and satisfied, right? And then just work on getting that win rate. But if you just look at the loss as, man, it just sounds, look how stupid it sounds. You know what I mean? Imagine if Michael Jordan missed a free throw or missed a dunk or whatever athletic term you want to use, and he quit. You know what I'm saying? Or, anything. Imagine the person that's building their own house or whatever, and they lay a brick wrong and, and that rock breaks or the brick breaks or whatever. Stop building the entire house. There's a quote too, and we'll end it off with this. I said this the other day, where I'm not going to say the exact number, but if I gave you $18 million and I went and I took $5,000 back, are you going to cry and give me the rest of the $18 million because I took $5,000? Or are you going to keep the $18 million and, go about your day and forget that I took the 5? Right? Most people would take the $18 million and go about their day, right? What you're doing is you're giving me the $18 million, right? And the whole concept of this is like your time, right? Don't let a 5-second loss or a 5-second argument or a 5-second conversation ruin the remaining 18 million seconds that you have in your day, right? So it's the same concept with trading, where don't let this one loss, this one bad day, affect your entire trading career that you're planning to do. I'm assuming all of us want to be full-time entrepreneurs and traders. You're going to be doing it the next 30, 40 years of your life to make full-time income for the rest of your life. So does it make any sense at all to get discouraged over a losing trade? Or is that you being a baby? That's the question you got to ask yourself. If it makes sense to be upset and to get upset about the trade, and it makes sense, to call yourself a quitter and a loser and to quit trading and to quit entrepreneurship, if the logical answers are pointing towards that and the math is pointing towards that, then by all means. But if it's not pointing towards that, which it isn't, right, the math is actually in your favor because everyone is a quitter. You know, it's really not that. The statistics for people losing and failing in trading is so high, not because, again, trading is high, so people are fucking quitters. You know what I mean? You want to make full-time income in a year from trading? You know what I'm saying? You want to make money for the next 40 years of your life? 50 years of your life? From a 3 months education? It is not likely to happen. You know what I'm saying? What is likely to happen, though, is if you stick with trading for 3 to 5 years, maybe 10 years, you'll learn everything about trading. And because you learn everything about trading, you'll grow an account. And when you grow an account and you work a good job, you'll start making money. And then in the next 20 years, you'll start making $5,000, $10,000 a month, $500 a day, however much a day you want to be making. And then you'll start growing from there, right? But you got to go through those works. You know what I mean? And it's so easy. That's what I'm saying. It's just boring. It's so easy. You just got to not quit. You know what I mean? That's it, right? So this week, guys, I encourage you to study hard and trade. If you lose a trade, when you lose a trade, just be happy because you're making progress. It means you're trading, right? The person that never loses a trade is the person that's never fucking trading. You know what I'm saying? So, if you're losing a trade, it means you're on the right path, right? Just looking at it on that spectrum, okay? And the best part is I'm here to help you. So if you're struggling and you're losing your trades, especially if you're a Cashflow student, these past couple weeks, like I said, I've been a little bit hectic with me personally, but and then here's the thing too, all you guys have the link to schedule a call with me. If you schedule a call with me, I will hop on the call, right? Or if you call me or text me, actually call me or text me, I'll get on the call, and I answer you, right? Or just ask the message in the Discord, right? Don't be embarrassed to say, hey guys, here's my trading log, here's my trades, I've lost recently, do any of you guys have pointers? You know what I mean? And I'm obviously going to answer you guys, or one of the other hundreds of people in the group are going to answer you, hopefully. You know what I'm saying? And if not, then I'll answer you, right? But point of what I'm saying is get the help and trade. You have to build the data. If you have no data, you're an entrepreneur at that point, right? You're an entrepreneur. We're not entrepreneurs, we're entrepreneurs, right? And entrepreneurs get numbers and get data, right? And they operate off of logic and facts, right? Entrepreneurs operate off of emotions and wishes, right? So this week, let's be entrepreneurs. This upcoming weekend, or this weekend, let's use the weekend to our advantage to study, backtest, lock in, get the mindset ready again, refresh yourself. And this week, let's dive in, trade, be businessmen and women, and be our best. More importantly, be your best and do your best, right? That's all you gotta do. Be your best and do your best, right? And you'll figure it out. If you be your best and you do your best, you won't fail, and you'll be able to sleep happily at night, more importantly, okay? So with that, guys, I love you all so much. I appreciate you all for staying on here for so long. I did do it a little bit longer tonight to make up for the, delays and stuff. So for those of you guys that watched here and that stayed, throughout the entire call, I appreciate you all. And I definitely hope that you all learned something tonight and that you were all able to take away some form of value, whether it was on the charts, about the data, about the news, about your mindset, whatever, right? And most importantly, I hope you were able to see how easy it is to backtest and to look at your trades when you follow a consistent strategy, okay? So stick to your strategy, stick to your rules, follow your analysis, and trade this week, guys. I love you all. Much love. Stay blessed, stay abundant, stay positive. And if you all need help from me, you all know where to find me at the top, because the bottom is way too crowded, ladies and gentlemen. God bless. Have a good night. And I will see you all in the Discord. Peace.
Thank you.